let's also get some perspective on the data points and the goings-on in China. Remember, no real market reaction as far as the Shanghai scene is concerned because due to the Dragon Boat holidays as well. Zhu Haibin joins us, Chief China Economist and Head of Greater China Economic Research, JP Morgan from Hong Kong. Very nice to have you on board with us. PK Bassi, you see him right there on the screen as well. So tell us, the data out of China was looking quite tepid. Do you think there is any scope in terms of change in monetary policy? Because it seems like they've pretty much used up a lot of their bullets, and at a time when there's ample credit out there. What do you think, Haibin?
Yes, I think if you look at data, yes, if you look at major indicators like FAI growth, retail sale, or trade balance, they are more or less in line with market expectations. But in detail, there's really a lack of excitement. Actually, there's something to worry that domestic demand is still on the weak side. But from monetary policy perspective, inflation pressure has come down, so that opens room for some policy easing. However, we do not think the central bank will start to cut policy rate, at least not in the near term. They're still in the observation period that in first quarter, credit has been extremely strong, and there's waiting for the credit growth to spill over to the real economic activity. So they'll probably wait for a few more months before they take any new actions.
PK?
Haibin, you talked about the possibility of a rate cut and policy easing. Given the fact that aggregate financing or social financing was up by 9.1 trillion renminbi in the first 5 months of the year, hasn't there already been a lot of credit created, and will any further easing help? That's one. Second is that fixed asset investment growth of more than 20% at a time when Li Keqiang is talking about overcapacity across many industries. Isn't 20.4% still too rapid for fixed asset investment growth in an economy that faces overcapacity?
You're perfectly right. If you look at the total social financing growth in the first 5 months, particularly in the first quarter, they have been much stronger, much easier than it should be. So in history, that if you look at the relationship between credit growth and the GDP growth, there's a typical some lagging effect. So it takes 3 quarters usually, say, from the credit growth to spill over to GDP growth. So that's the first reason why we don't think that central bank will think about policy rate cut in the near term, because it still takes time for the credit growth to be reflecting economic activity. And the second point is, as you pointed out, that it's a big question mark, say, how effective this credit channel is in China these days. If you compare nowadays in China versus, say, several years ago, it takes more credit or more investment to drive the same unit of the GDP growth. So in that sense, the central bank is also thinking that probably not so effective this time. You rely more on the structural economic reform or fiscal policy to address this struggle imbalance issue in China.
Yeah, when it comes to the issue of overcapacity, nowhere is that more pronounced in the steel sector. What average industry margins per ton is something like 7 US cents. We're also hearing that a lot of these steel makers need to go bust. So in light of what's happening on this ground in China, how real are the imbalances really happening? And will it be possible to even attain the 7.5% GDP target?
Yeah, overcapacity is the biggest problem for China these days. Unfortunately, we don't see the shutdown of these particularly inefficient overcapacity in the economy. So basically, the market is relying on the comeback in the domestic demand. However, domestic demand still remain on the weak side. Taking, for example, the steel industry, we have seen some comeback in the demand, but the demand comeback is much weaker compared to the supply comeback. And that has been causing the problem that the inventory in the steel has come back to historical high. And the same situation applies to a few other key sectors. So for this year and also probably in the next few years, the overcapacity and the investment efficiency probably will be a major drag for the China economic growth.
Okay, certainly seems to be a key issue for China, and we'll keep on watching this. But I'd be curious to see how the mainland markets react from Thursday. Thank you so much for your thoughts and insights there.